How to never get denied for a loan again.
You know what? It's a lot of things that we don't know as a community that we need to know.
Turn that penny into a 5.3 million. You want to learn how to make your money work hard for you rather than working hard for money? I want you to be there. Tune in. Hey, it's me again, and I am here with my girl.
The insurance cash flow concept. Here we are. Once again, now one of the things we talked about, and that was the power of leverage. How do we leverage our money? The magic of leveraging. The magic of leveraging our money. We shared, we talked, we understood the guaranteed approvals, how I can take out a loan. What about paying that loan back? What do I do and how do I pay myself back? Now, typically, you take out a loan for a mortgage, 30 years. In most cases, 15 perhaps. However, it still has to be paid back. Car finance, automobile, boats, whatever it is, whatever your heart desires, there is no, unlike a 401k, I have to specify what that money is being used for. No, this is my cash accumulation. I can use that money whenever, however, I choose to use it. Correct? Well, yes, the answer is correct. You simply can use the money for whatever you are looking to do. And if that's financing a car, if that's financing a house, yes, the money is there. As long as the cash accumulation is there for you to borrow against. One of the great things about leverage and paying yourself back once you leverage the money is that you now are the bank. You have become your own bank. I talk about that here. You are now the bank. What do you mean by I am now the bank? I am now the bank? What are you saying? What does that simply mean, I am now the bank? As a bank, when a bank loans out money, the bank makes money. So why would a bank be in business if they're not making money? So once you take out a loan against your money, why would you not pay yourself back as the bank? The bank does it to you. You have an opportunity to recapture all of the interest that you are borrowing. So you're borrowing against this $106,000 we talked about, right? So if you're borrowing against it, you can pay yourself back. You can set the interest rate and you can pay yourself back more than what the insurance companies would typically charge you on a loan. And it will be a better rate than what you would probably get at any banking institution. It wouldn't even matter because at that point, who is getting rich? The bank or yourself? I want you to understand the power of paying yourself back and how you recapture all of this. Not only do you recapture all of the interest on the loan, but let's just say I don't want to pay the loan back this month, next month, or next year. The choice is yours. Now, I need to let that sink in. Are you saying, Lene, I don't have to pay myself back, but I took out a loan? You took out a loan against what you have, what is called accumulated cash value. So you took out a collateral loan against the money that you have sitting in your YLIP, your life insurance policy. Your policy that you designed, that it was designed for you with you in mind. So if you take out the money and you don't pay it back, well, guess what happens? Once, God forbids, the unexpected happens, that money is just deducted out of the face value policy, and then the rest is passed on to your heirs, tax free. These are benefits that a lot of us are not even made privy to. Why? Because most of us have been introduced to what I call junk policies, right? We've all know about insurance. Yeah, I have a policy. Yeah, I'm this, I'm that, whatever. However, are you leveraging your insurance policies? Are you actually able to take money out of your policies and then pay yourself back and still accumulate wealth? Now, if that's not happening, then again, it's fair to say it's a junk policy. Because once you understand the leverage of how the insurance cash flow concept actually works, you're learning how to become wealthy. You're on the path of wealth, the transfer of wealth, how that wealth is now passed down to your heirs, how that wealth can be explained to your family and friends. This is an opportunity not just for myself and you, but this is an opportunity for the entire lineage. It passes down from generation to generation. A good man leaves an inheritance for his children's children, right? This is the example. Now, you heard me say it. It's been around for over 200 years. There's nothing new under the sun, but we have to get exposure. We have to expose our family and friends to something as great as understanding the magic of leverage, the magic of leveraging, the magic of being able to pay yourself back and recapture all of the interest that you would have paid back over here. That penny concept that we talked about. I'm here to show you how to take that 1 cent and turn it into $5.3 million. $5.3 million, 1 cent. Why would I not pay myself back? Every time I get a check, I'm paying myself. I'm putting it here. So when I need some money now, I can come right to my policy, pull the cash out. The money is still there, still earning a return, a dividend. Because guess what? The insurance companies have to loan out money as well in order for the thing to work. In order for the insurance companies to stay in business, just like the banking institutions, they have to loan money. So if I am a owner, because as a life policy owner, you become a partial owner. So the dividends that are being paid out are actually return of premiums. That's a overage of what the insurance company made in a given year. And as a owner, part owner, because you have a policy as a part owner, you now have a return of dividends. Now, understanding this simple concept is vital. It's important to know how our money actually works. I'm excited. And I'm sure by now you are excited too. You want to get your insurance policy. You want to be able to leverage. You want to be able to sit down so it can be designed with you in mind. What can you afford to put away? That's a decision that you will make. That's a decision that I had to make. But the great thing about once this policy is enforced and put in place, it's there for a lifetime. It's important that you create the wealth, not just for yourself, but for the next generation, and the next generation, and the next generation. How are you the bank? What makes you your own bank? What makes you the banking institution? When I saw the book, I was clueless. I'm thinking, I'm going to need a lot of money if I have to open up my own bank. How do I become the banker? What does that actually mean? I am the bank. Become your own banker. Infinite banking. What does that actually mean? And as I pondered and as I read and as I got more understanding of leveraging my own money, absolutely, I'm the bank. I can finance my own cars. I can finance my home. So I will have to agree. I am the bank. You owe it to yourself to get the understanding, of what it takes to understand the process of paying it back. Why do I want to pay the loan back? Because now, imagine, if I'm putting this in a 4-year period, I have over $100,000. I made $6,000 in dividends. In 4 more years, this is less than 10 years, people. Less than 10 years. Are you telling me I'm going to have over $212,000 and all I did was put a little bit away every month? Absolutely. So in 8 years, I have over $212,000. I borrowed the $106,000 that I never paid back because I just decided I wasn't ready to pay it back. But I own the car, I own the house, free and clear. Now I'm back at $112,000 because I'm still accumulating cash. So you mean to tell me 4 years later I can do the same thing again? But if I pay myself back in that 4-year period, I not only have $112,000, I have $212,000. Isn't that great news? To know that I can do something as simple as understanding a simple concept. A simple concept. I'm not selling a product. This is a simple concept that you can do. We all can do. The bullet points here are simple. Guaranteed approvals. How to make your money grow. How to take out a loan regardless of your credit. This isn't made up. This is understanding how you can take your own money that you're making and stop working hard and make your money work hard for you. Now, why are we still not getting this process? Because how you do anything is how you do everything. And if you're not changing the how you do everything, that's going to be always the way. All you know to do is borrow, borrow, borrow. If it doesn't challenge you, it cannot change you. A great quote that I love to state, and that is, every expert in anything was once a beginner. Now, thinking big, dreaming big, changing your thinking, it changes your life. This is an opportunity. It represents the gift of unlimited potential, okay? So this is not designed to say, I want you to change careers. I want you to invest in something that you're going to, this is a get rich quick. No, it's a simple understanding of how money actually was always intended to work hard for you. My money is working hard for me now, and I'm excited about that. And I had to share this great news with everyone. I want the world to know. Why are we still spending money? Linear, dollar for hours. I have no understanding of residual and how money is still supposed to work for me even while I am sleeping. Now, if the big corporations, if they can do it, then why can't I do it? Why can't I become my own banker over my own policy? You can. There's nothing stopping you. There's nothing stopping you from becoming your own banker and understanding the process of paying yourself back. You don't want to cheat yourself. Now, yes, I said you can take out a loan, and yes, I did state that you typically don't have to pay it back. Now, on each of these loans, there are interests. If you just wanted to take out the first $25,000, You're going to pay the yearly interest payment once a year, not monthly, but once a year. But I'm saying pay yourself back, pay the entire amount back, because in 4 years, if I created an amortization table, and that is a spreadsheet that typically shows your breakdown of your payments when you take out a loan in a mortgage or a typical car 5-year payment plan, they're going to give you an amortization of what you're paying back in interest. The first couple of years is interest, and then you start paying on the principal at some point, right? And then you eventually pay that money down. So if I take out a 30-year mortgage on a property and I paid $100,000 for the property, I'm going to probably end up giving them close to $400,000 or $500,000 when it's all said and done. If I'm willing to do that over a 30-year period, why would I not commit to this policy for a 30-year period? Can you imagine what you will have in 30 years if you started today? Can you just imagine? We talked about $5.3 million in 30 days. The numbers are astounding. I can't even imagine that you can't imagine, because it's not too good to be true. This is a simple concept that we all have an opportunity to take advantage of. It's a simple concept. Now, this is a must. This is a must. This is a must. And my acronym for family is forget about me. I love you. I love you enough to share this information. I love you enough to come to you with information that was discovered. I discovered this information. And because of my discovery, I'm standing here today sharing some powerful, powerful information that can change your life outcome, your children's life. This is a pass on to your heirs. If you have a 401k and that 401k is designed to sit until you're 70, that money cannot be touched. That money is sitting there. So by the time you've reached 70, that is towards the end of life. These policies can be accessed at any given time, tax-free for whatever you desire. And that money will be instantly sent right over to your bank. A concept, a simple concept. So I'm going to make sure we come back. When I come back, we're going to talk about more on the tax benefits, how to pass it on to your heirs. This is an opportunity for all. Thank you.
Wonderful. Oh, she did it. Oh, she did it. Live your blessed life.